Hello everyone, welcome to another episode of Closing Bell. Really important day. We had the Fed meeting, the Fed talk, the 75 basis point, lots of stuff happening. So for those of you who are tuning in, give us a thumbs up if you're hearing our voice and everything is good. Andrew is here. He's wearing a suit on the top part and a short on the bottom half. Luckily, we can't see the bottom half.
That is the style in peak capital trading. So I'm always coming with my running dress. So I don't know if you can.
Yeah, you gotta go a little further back. Yeah.
So I'm coming with the running shoes. So whenever I have time, I go for a run. But it's good to keep the top professional.
yeah, definitely. We got tons of people joining us right now. Well, first of all, welcome. A lot of stuff is happening about the Fed minute. We talked yesterday about the 75 basis point now being kind of priced in, and it seems like that was the case pretty much. If you look at the chart, Andrew, maybe you can show SPY on your chart. The market prior to the meeting and then after the meeting didn't move by much, like not by a lot. It went up a little bit, and we're going to talk a little bit about that. And we'll dive into the Twitter world. Bill Ackman had something to say about the Fed. We know how kind of aggressive he is and how outspoken he is when it comes to issues like that. Andrew, what are you seeing? What did you trade?
So all across the board, the market is ripping right now. So we broke a very important level, 390 on the SPY 2 days ago on the fear of inflation. Today, as the Fed's announcement came in, we saw a little bit of volatility. And then later, during the speech, when Jay Powell started his speech, he started at 2:30. He said something, I don't know exactly what he said, that the market really liked it. The volume popped up and continued going up. And then it's the consolidation above the VWAP, and then the rip continues going higher. I'm not sure if it's going to stay like this or not, but Qs are up 3%, SPY 2%, IWM 2.3%. I personally traded TQQ for this bull flag. So obviously when I saw the confirmation that the VWAP is getting, I went long. I posted that actually on Twitter. I might actually bring my Twitter as well, and then sold toward the high. So that was a really nice trade. Earlier this morning, I was trading TQQ. It was really choppy, difficult to trade earlier this morning. But so far, great volatility. And I stayed away from this volatility. But I noticed that after this bull flag, it was really nice that you can just go in there and then continue. I actually didn't trade the SPY. I traded TQQ, which is more volatile, and it's following the same pattern. So TQQ, this is the first time. This is the first bull flag, and I went long here, put a stop loss below the moving averages, and I wrote the momentum to the top. And I posted on Twitter and chatroom as well.
What's that strategy called, Andrew?
This one I would call is essentially a bull flag or ABCD pattern.
Bull flag.
Bull flag, yeah.
This is an inside joke Andrew and I have. That's pretty awesome, man. Good work on that. We have a really packed show. Today we have a guest. On Wednesday we bring one of the members, one of our traders who's been consistent, and we share their stories. This week we have Jeremy on. He's going to come on. He's been a member in BBT since February. He'll join us in about 25 to 30 minutes. He'll share his story. I have tons of notes here, and the question I want to ask him and the stuff he shared is pretty fascinating. So, if you have the time, definitely stick with us till the end of the show, till we get to Jeremy. All right, let's cut to the chase. Let's talk about the market and the Fed's meeting. We, initially I said yesterday as well, I said we have two fears in the market. We have kind of the growth fear and the growth scares, like that's what's going to happen to earning per shares and earning per shares for companies. And of course we have the inflation. And for a little while we thought that inflation has peaked, but this is becoming a larger and larger fear in the market. And for that very same reason, we had really reputable people in the market like Bill Ackman. Let me bring up the tweet really quickly. Give me one sec. Kind of saying, hey, Fed needs to start credibility again, maybe raising the rates by even 100 bips today. So that's 1% move, or 75%, basis point back to back. So, everybody, every person reputable, they're like, forget about the growth scares and the fear of recession and all that stuff. Let's get inflation under the control. And when we looked at the Fed's probability for the interest rate hike, it's, as traders, it's really important to understand, okay, what is priced in and what is not. So let me bring up the Fed's probability. Give me one sec here. This was the probability for today. So everybody was pricing in that 75% by 90%, right? So the 75 bips was actually completely priced in. So that's why it didn't really surprise the market at all. The market didn't sell off or anything like that because, that was kind of the expectation, and that's what was priced in.
Yeah.
Andrew.
So Adi, how's the bond market doing, and how the bond market reacting to this? Can you explain to me and to, of course, audience, that the bond market is the biggest market right now? So how is that one impacting these interest rates?
Let's take a look at the yield curve. But overall, so what we're seeing right now on a front Fed, what the Fed is doing right now, it's a process basically called front loading, and that means they're increasing the rates really quickly, really fast, and the Fed. The yield curve, looking something like this. This is kind of your maturity, like this. Let's say this is your 30-year, this is your 10-year, this is your 2-year. You want to be able to get paid more interest as you go longer in maturity. So the further you go, and this is over here, you have the yield, right? If this is kind of your yield curve. Per se. What they're doing is they're front loading right now. So they're increasing the interest rate on the 1 year, on the 2 year, and this is putting upward pressure on the yield. Theoretically, every time there's an upward pressure on the yield, there will be a downward pressure on the prices. So on the longer term though, every time we're doing front loading, that means a higher chance of recession. So that means in the future, the Fed has to start bringing the rates down. So what happens is you go from a healthy yield curve that looks something like this to something that looks more flat or even inverted. And we know the inverted yield curve means probability of a recession. So if you give me a minute, I can actually bring up the yield curve live, and we can take a look at that as well.
Awesome. So right now, Tesla is leading. QQQ is leading with 3% move up. Qs are really beaten up in the last couple of months. Tesla is up 6%. Even DocuSign, who got really destroyed over the earning, it's moving up. So the whole market is pretty much moving together. And it's amazing that everything is so correlated now. In terms of, I read something in the terms of, in the times of volatility, extreme volatility, the correlation really goes to 1. Everything is essentially moving together.
Except for Bitcoin, Andrew.
But speaking of Bitcoin, I'm glad actually you mentioned that the Bitcoin bros are not having a good time. Bitcoin currently is trading at just below 22,000. It dipped almost to $20,000, which was really scary. And we saw Dogecoin, it's at 6 cents. Ethereum almost touched $1,000. So crypto community, the whole crypto industry is in a big question mark, and I don't know exactly where this crypto volatility goes, but that's not good. It was supposed to be a safe haven from all of these volatilities.
Yeah, forget all those. But if you go back to your trading terminal really quickly, up until 2 weeks ago, NASDAQ, so QQQ, NASDAQ 100, and Bitcoin were like moving step by step. Like the correlation was almost 1. I even have a screenshot. I'll send it out in my newsletter maybe next week. The correlation was almost 1. I think it was like 0.9, really closely. Right at the 2 weeks ago mark, that correlation broke. So like today, you're seeing Qs being up almost 3%, and Bitcoin is just flat. So that kind of shows you that, okay, something in the macro environment has changed. Now, Bitcoin is no longer a risk asset. There is something else, because we talked about this. There is a bottom for Apple. It's producing cash flow. There's a bottom for NASDAQ eventually. that buyers will step in. Is there a bottom for Bitcoin? We don't know, right? So, I mean, of course, there's Bitcoin, kind of maximists who believe in Bitcoin and they believe in their application and they're going to step in and put some buying pressure. But that was one of the interesting things, looking at the correlation, the NASDAQ and Bitcoin, and that correlation broke about 2 weeks ago.
Yeah,
and we're seeing it today.
I mean, crypto couldn't really become a standard like goal for all the institutions. I mean, the whole $100,000 Bitcoin was based on assumption that some funds and some corporations are moving at least part of their assets to crypto Bitcoin. Like Tesla, I think did 5% to Bitcoin. I don't know if they still have it or not, but that assumption definitely has broken. So it's not only it's a hedge against inflation, it's a risky asset correlated with all of the other risky assets. Plus, so much excessive leverage in Bitcoin and exchanges that in terms of volatility, even we noticed that Binance paused all the withdrawals in Bitcoin. So huge leverage, huge capitulation in the cryptocurrency market is possible, and that's very, very dangerous. And and it's a much less regulated market all around the world. So someone asked in the chat room, do you think it's going to go down or not? I think it's still, has the room to go down. It failed to provide the confidence to investors and traders that they can park their money in there. And that's the most, dangerous thing that happened, the most destructive things that happened to crypto community is that you cannot trust the system. And can it pick up again? I don't know. And we are getting into the financial tightening. The free money is not available anymore. So it's really hard to see if crypto, it has a mountain to climb to go back to $69,000.
Yeah. I mean, it has to go up by 100%, more than 100% to get back to all-time high. And that's the double-edged sword of math, right? Like if you go down by 50%, you got to go back up by 100% to get back to break even. So the further you go down, the harder it is to get back up. So that's the name of the game. That's how mathematics work, and this is one of the things. Let's get to that yield curve question. I brought the yield curve up. So this is literally what front loading means. So you have your 2-year now almost at 3.2%, and you have your 10-year also at 3.2%. So what you're seeing is, I'm sorry, this is your 10-year right here. So what you're seeing is kind of the 2 and 10 inverting. So a lot of pressure, a lot of, Fed is really aggressive, putting a lot of pressure on the front end of the end of the yield curve, and on the bottom half, so your 20, 30, and 10, the yields are actually coming down. And that's kind of, this is what happens in a recessionary environment, right? When the market as a whole believes that over the next 3-4 years, Fed has to start easing again, because that's what's going to happen to inflation, unemployment. That was one of the things actually Fed talked about, Powell talked about, that their forecast is, I think, 4% unemployment by 2024. So that means they want the job market to cool off. So they want the unemployment being at like 3% right now. They want it to go up by a percentage, and that's like millions of people losing their job, basically.
Yeah,
right?
There is definitely a need for a slack in the job market, because it's really good that everyone is having a job and the maximum employment, but there's a problem. Then the cost of employment is going to go up. You are a small business owner, you want to hire people, you cannot. What you should do, you should hire and bid up the price, and this increase in the price will pass on either to the customers or it reduces the profit margin of the companies. Therefore, a little bit of a slack in the job market is good, and Feds, that's what they want. Here's another thing. I mean, the whole concept of business cycles is something new. Go back to 200 years ago. I mentioned that even Karl Marx in his book in 1864, Das Kapital, which is written in German, says that the capitalism economy has to go through the cycles of financial easing, and then go through the financial tightening. People lose jobs, and the small businesses go out of the business, and then you do another cycle. That what happens here right now, that the inflation actually shortened these cycles. These cycles used to be 10, 15 years. Now we're going to see these cycles in a matter of 2 years, and that's just because the inflation that is really high, and therefore the cycle is going to have to be shorter and shorter and shorter.
Yeah, that's a great point. Definitely, this boom and bust is nothing new, and we've been talking about it in our chat room as well, for a little while. We got a couple of questions coming in. So, Life of My Life is saying, do you recommend when going long? The idea of researching a stock for catalysts before you trade them. If your question is about day trading, in terms of researching, the only tool we use, especially Andrew and the rest of the BBT members who are kind of day trading and looking for catalysts, are using a scanner. So, the trading terminal is building its own scanner. So soon we're gonna have our own scanner. But there is other names as well, like Trade Idea, who offers the scanners. And those scanners usually stocks that gap up or have earning. There is going to be a catalyst that make them gap up or gap down. So hopefully that answers your question. Let's go ahead to our agenda, because we got a packed show. I want us to cover everything. We are going to talk about the Fed meeting, of course. We talked about it a little bit. U.S. retail sales number came out. I want to do a little small deep dive in there as well. A lot is happening in the world of Twitter with Elon Musk and the crypto market. I want to cover those as well. And then, of course, in about 15 to 20 minutes, we're going to have maybe even a little list. We're going to have Jeremy on, and he's going to talk about his journey as a trader, which is a fascinating journey, by the way. Let's go to the Fed's meeting. This is Fed's dot plot, Andrew. So this is basically where they think the rates are going to be, Fed's fund rate. They think by the end of 22, and each dot is basically where each of the members think the rate's going to be. They think by end of 2022, they're going to be somewhere around 3.5. So this just shows you how aggressive they're going to raise rate, right? Because 2022, we're almost done with 2022. And they got the July meeting, and then they got a September meeting, I believe. And then there's October, and then I think there's December. I believe there's only 4 meetings left. So they're going to be really aggressive. Right now, the rates is at 1.75. So, we're almost going to double that. Within a span of a year. This is one of the fastest tightening cycles we've seen, and hence the crash in the market, right? Especially in the Nasdaq. But one of the problems I have with this, Fed dot plot is it's pretty useless, right? Because they don't stick by it. Right? They were talking about 50 basis points, but then they changed their mind, and now they did 75 basis points. So why are you even giving us a dot plot when you're going to surprise the market like that?
Yeah, exactly. I mean, they also, to fairness for them, they also mentioned that they look at their macroeconomic data, and they don't want to crash the market. They don't want to, send the economy into the recession, but they have to control the inflation. And they lost a huge credibility in controlling the inflation, and they have to do it. They have been at least honest that we do everything to control the inflation. And the most important tool that they have is increasing the interest rate. So nobody should be surprised if the inflation goes even higher, then we'll see a 1% increase in the next meeting, because they have been very, very clear about the fact that they are there to aggressively control the inflation.
Yeah, this is the probability right now as of today for the next meeting, end of July. You got. This is 50 basis point, this is 75, and there's 10% of people who think they're going to go even higher than that. So very, very, very interesting. People are turning really, really hawkish in the market. Let's get into the retail sales number. They also came out, and I think these are interesting as well. What do you see here? Obvious trend downward, right? So the retail sales is really, really coming down. Demand is really softening. And we talked about this even yesterday. We said when you look at the CPI, the core CPI is coming down. It's the headline, which is the energy and the food that are really volatile right now. But the core is coming down because the demand is softening, right? And we're seeing it in almost every business. That's what everybody's talking about as well. Let's go to the next point that I had ready here. Consumer spending, of course, restaurant sales were up, so we're seeing a shift from goods to service. During the pandemic, when everything was closed, people were spending a lot of money on goods. Now we're seeing a shift, and people are spending more on, services, like your airline ticket has been going up by, I think, 15%. Restaurant sales are up, so things in that nature, there's a little bit of a shift in consumer behavior. Of course, there's retail inventory buildup. That's nothing new. We know that about Walmart and Target, how they're having problems selling their inventory. That means future markdown. That's another downward pressure on inflation.
Yeah.
Go ahead, Andrew.
Yeah, if anyone is interested about the, Ardi's book, by the way, I just posted the link to Ardi's book. Someone mentioned that. There's a link for that. Ardi's book is now a bestseller. You can show my screen if you want, Santiago, that Ardi's book is a bestseller right now. And, it's already priced in. So if anyone is interested about these topics, about profitability and the fundamentals of the stock market, plus trading, different category, you can actually look into that. The stream I think is about 10-15 seconds delayed, yes. So sometimes you see a little bit of a delay from that.
Yeah,
Ravi.
There was a little bit of a lag, Ravi. I also saw that. I'm seeing it as on my screen, but hopefully we'll fix it. Our producer knows about it. Andrew, let's get into Twitter. Something really interesting happened. So Coinbase just basically dropped 18% of their staff. They're reducing size, and the CEO of Binance made this tweet. It was not easy saying no to Super Bowl ads, stadium naming rights. He's talking about Crypto.com and Coinbase here. Large sponsored deals a few months ago, but we did. Today we are hiring 2,000 open positions. Wow, so amazing. And he posted this picture. And apparently this is a picture from stock image. And he just photoshopped his face. Obviously not him, probably his marketing team. But I mean, going from, stopping withdrawal on your accounts to then this, I don't know how to call this, this kind of terrible job your marketing team is doing. Like,
this is unbelievable.
Unbelievable.
This is unbelievable. This is the original email. You can actually show my screen. This is unbelievable that this is CEO of Binance, CZ, just posted that, and then people came, and it's so easy that people came, and this is the original one.
Yeah.
And why did you Photoshop yourself in there? Couldn't you just go and take a picture? You don't have anyone in that. And someone mentioned that I can see actually the watermark of Getty image. It means that you didn't even paid for the licensing. That's amazing. So that's really, really fun.
I think the funniest thing here was the fact that he's like, oh, we're hiring. Yeah, maybe you should be hiring a new marketing team or whoever that did this, or some photographer full time to take a picture of you. I mean, this was really interesting. I mean, talk about when things get crazy and extreme, especially right now in the crypto market. You see stuff like this happen all the time. Another really interesting thing. Someone in the chat, Timmy, is saying make Staples Center great again. I'm totally with you, Timmy. The Crypto.com just doesn't have the good ring to it. Let's make it Staples
Where is
Center.
Matt Damon? Where is Matt Damon? I want to know where is Matt Damon, because for those of you who don't know, Matt Damon had an advertisement, I think, for Crypto.com that was talking about that the life favors the brave.
Yeah.
And the people who are brave enough to buy into the crypto. And where is Matt Damon right now?
And that was literally the top, right?
That was literally the top.
60,000.
Yeah.
And this might take another 3-4 years that we get back to 60,000. So anyway, but here's another interesting tweet that I want us to spend maybe a few minutes before we get Jeremy on. Christopher Blomstrand, he's a fund manager, one of the favorite people I follow. And he picks on people with no skin in the game. Like he picked on Chamath Palihapitiya a year ago about his SPACs and his kind of shady behavior. And here he's talking about, the CEO of Coinbase and his letter that he sent out, and he made it public on purpose that he's letting 18% of his team go. And he's saying basically this guy, CEO Brian, the founder, and his top 3 executives managed to already sell nearly 1 billion shares of Coinbase after the IPO. In the meantime, the stock lost 80%. Brian used his cash to buy a $133 million Bel Air mansion, 10 bedroom, 13 bath. Sure, gotta keep that up. And the irony of this was around the same time he bought this $133 million mansion, around the same time that Coinbase was really pushing through metaverse and real estate in metaverse. And then you have the founder and the CEO buying $133 million in cash, by the way, in US dollars, a mansion in LA. And then he goes on further, and I kind of want to talk about this. You know, when I personally look at, I was telling you, Andrew, when I look at companies fundamentally, first thing I look at is not the income statement, not the balance sheet, not the forecast. The first thing I look at is governance and corporate governance. Like, is the management have a skin in the game? What is their pay structure? I mean, you can see here the base of Armstrong. The salary is $1 million. I mean, usually CEOs pay themselves like $1 and make it a stock base, but his base is $1 million. And look at the option award. 56 million shares was his option award. I mean, ridiculous amount of money. I think he made about 300 million for the IPO, and yet his stock is down 80%.
Yeah, so that means that running a public company, especially unprofitable company, doesn't necessarily mean that people on the top are getting hurt. And that's unfortunate in the public market. That's why Warren Buffett says has become a casino. And a lot of con artists and scammers and showmans are running the show. A lot in majority of the public companies. There's so many zombie companies that they have no revenue, and that stock market drop is kind of one of the reasons was because of all of these unprofitable SPACs and pouring money into the JPEG of monkeys or tokens named after dog. Those kind of behavior was just obviously that we are living in a bubble. You just have to see the signs very clearly.
Yeah. I mean, somebody emailed me and is like, Artie, would love for you to have like a fundamental course one day at BBT. And if I ever make a fundamental course, the first chapter, the first video will be on corporate governance, because I think that's the most important thing. Does the management have a skin in the game? Are they good management? That's what Warren Buffett says, right? He's like, we are not stock pickers. We're business pickers. We look at good managers running good businesses.
Yeah, exactly.
Yeah.
Who's Warren Buffett? No, I'm just kidding. Yeah. So Warren Buffett has, yearly there's a letter that is sent to all the shareholders, and it's, he talks very personally about Charlie and himself and how they run the company. And so it's really funny actually reading his letter. And this year he was saying that, we're always looking for good businesses that generating revenue. And one of the criteria that they have is actually good management. Yeah. So no matter how amazing business you have, but if the management and the governance of the company is bad, then they don't invest in it. And that's why they have the 4 big elements in the portfolio: the railroad industry, the insurance industry, Apple is another one, and another one that I don't remember. I think it's in, now it might be oil and gas. I don't remember. Occidental Petroleum. Yeah. And, in his letter, he was talking about his relationships with CEO. Like, Steve Cook's,
Tim Cook.
The CEO of Apple's very good relationship. He trusts his leadership in the company, and that's why they're almost 7% shareholder of Apple. So it's so important, the governance of the company. Yeah. And even in the small businesses, the management, the CEO, how the decisions that they're taking the company to that direction has a huge impact on the investors and potentially employees of the company. Yeah,
definitely. So, if you guys are ready for Jeremy to come on the show, please give us a thumbs up right now. Give us a thumbs up in the chat, like the video. If you haven't subscribed, definitely subscribe. Santiago, let's get Jeremy on the line, if he is on the line within the next few minutes. He's still working. So the market is now closed. S&P closed the day 1.4%. So if you can take a look at my screen, I'm on Trading Terminal, the tool we're building for our traders. S&P up 1.4, NASDAQ up 2.5, Dow 1%, small caps, IWM 1.4, and Bitcoin is red. Again, this correlation is no longer holding. So this was interesting. Lumber went up. That's kind of good for housing, good for the economy. Gold also went up. This was interesting. Volatility came down. If you followed me this week, all I did was premium selling, because I know that VIX of over 30 is not maintainable, right? So it can't stay over 30 forever. That's when you want to be aggressive and sell some premium. So hopefully you did get the chance to follow me. In terms of our sectors, what are we doing? Let's go ahead and tech. Let's go. really the only up sector was technology today? That doesn't seem right.
No, maybe refresh that.
Yeah, I gotta refresh that. I'm pretty sure. Yeah, there we go. Consumer discretionary up 2.8, real estate 2.2. So every sector was up except for energy. So this was kind of predictable as well. Year-to-date return as of now. Let's take a look at that. Still Nasdaq 30%, 23%, SPY down 20%. All right, Santiago, our producer, is telling us Jeremy is with us right now. I'm seeing a lot of thumbs up coming in. Jeremy, welcome to the show. How are you?
Thanks very much, man. I'm good. I'm a little, my adrenaline's running after that crazy price action we just had. What was that?
Well, the volatility always in these extreme times, it's really fun. But here's the thing, Jeremy. I told the people in the chat room this morning that you can become a consistently profitable trader without touching these moments. I do it every morning for you live. I actually went and trade, but I didn't have to. You really don't need to chase this kind of volatility, especially that a lot of them are, eventually become directionless. Thank you so much, Jeremy. Great talking to you. Thanks for being such an amazing member. And people like you motivate a lot of new traders. We can go and bring the best traders, most famous with a lot of followers. But I think the amount of things that we can learn from you as a retail trader, in your PJs, in the basement of your place, is probably more useful for ordinary traders than just bringing a good.
I don't know, man. That background doesn't look to me like a basement, Andrew.
It looks like an attic.
It looks like a nice place in Los Angeles, California. But anyway.
As a stereotype, I mentioned that. I don't know if you noticed that earlier or not. I'm actually in my running shorts. So after this, I'm gonna go run.
I figured, yeah. I figured you guys had on tennis shoes and shorts. I knew it. I did put on a pair of jeans for you guys, so.
There we go, in case anything happened. Well, Jeremy, welcome to the show. Walk us kind of through your journey. Thank you for the notes that you sent me. We're going to touch base on a lot of those stuff that you sent me. But, kind of walk us through your journey, how you got started, how you got into trading, how did you find us, walk us through. Floor is yours.
Okay, sure. Yeah, so like a lot of current people that are getting into trading, I started in crypto. I know Andrew loves crypto. It's like his favorite thing. I was using a lot of, like we all do, the fundamental approach to learning about, the different coins and whatnot. And I knew nothing about charting. I knew nothing about what I was doing. I always felt worried that I wouldn't know when to sell, things like that. In 2018, I had a monster win in Ripple, and I was just totally hooked on trading at that point. I called a buddy of mine in finance, and I said, Ripple just blew up. Like, when do I sell? What do I do? What do I do? And he said to sell sooner than later, and that was the only advice I had. So I said, okay, I'm just rolling the dice here. And then again, like a lot of people, I got a Robinhood account. I started dabbling into stocks, and I was able to grow my account about 4 times. It took about a year. It wasn't very fast, but I could really see the potential. And I started to kind of move into stocks. I started to see a lot of mentions of bear bull traders and you guys on Twitter. I started to kind of dive in and start following people, and then I joined some Discords. And, I started following call-outs, right? Yeah. Like we all do.
Yeah.
And I just really wasn't making any money. And I noticed that the times when I made money were when certain people would do a call-out the night before, and they'd say, listen, I just charted, this ticker looks like it's about to go off. Yeah. And then I would jump on the chart and I would kind of copy their moves, and I would make a decision, is this something that I want to get into or not? So from that, I was like, I really need to learn charting. And I read about 30 books over the course of the last year. I saved Andrews for number 5 because I was afraid that, at the time I was kind of a long hold investor. I was afraid it was going to turn me into a day trader. I wasn't sure if that's what I wanted or if I would be good at that. It just seemed really intimidating and kind of something that you need to go, for 8 years of school and some prestigious university to achieve. So I held off, and then once I cracked that book, I got to tell you, I didn't read it cover to cover. It was, for me, it was like a manual. Um, I constantly was referencing, this chapter, that chapter, jumping around, and I flew through it. I love the book so much. I felt like I became a day trader after I read that book, and it really inspired me to join Bearable Traders. I wanted to challenge myself to join off the profits I made from trading. I didn't want to pay for it out of pocket, and I was able to do that in February. So very exciting thing for me. And I wanted to mention this story. Andrew, I think it's in the book. He talks about, he goes on vacation and he goes to Wall Street and he's standing in front of the gold bull. And, I looked at this photo and I was expecting him like all polished and in a suit with like a briefcase.
Yeah.
And he's standing there in his sunglasses and a t-shirt. He's got a backpack on. And it dawned on me, I'm like, this guy's in Canada and he's doing it remotely. I could do this remotely without having to street and be an apprentice or something.
Yeah.
So
I
that was a
remember
huge
that. Thanks.
inspiration for me.
Yeah, thanks
Yeah.
a lot for that. I appreciate that. I'm glad that you actually read that, remembered that.
Yeah.
Yeah, I love that. I love that bit. That was so inspiring.
Yeah, go ahead, Jeremy.
So-
yeah, please.
Yeah, so moving ahead, in 2020, we all went into COVID lockdown. And I had been doing really well in crypto. I'd been starting to do, to make some money in trading shares. I started trading Forex, and I started to moderate a couple of groups on Discord. And I just got really involved with that. My philosophy is if I can talk about it and I can teach someone else to do it, then maybe I have a better understanding of it.
Yeah.
So that's helped me quite a bit. During lockdown, I made a probably large portion of my income from trading. And I think a lot of us, there's probably a lot of people that started in 2020, 2019, and a lot of early success, got lucky. It was a time where you could just throw anything at the wall and it would just take off. The trend was your friend. And so I was just terrified that was going to end and I wasn't going to know. We were all watching that plus 45-degree spike on SPY for months, and I would just get like so nervous when I would see that. So let's see. Going on from there, I joined Bearable Traders. I started diving into the curriculum and the webinars. And I got to tell you, I really got a lot out of Thor and Peter. Man, the Mountain Pass technique has changed my life. That's my favorite play, for sure. So, yeah, what else?
So what do you recommend for new traders? Imagine there is a lot of new traders are not member watching these and they're wondering about this volatility market, and especially financial and education industry. There's a lot of scammers, fake promises. Imagine knowing what you know now, someone wants to start. What are your recommendations to that person?
Well, you do have to be wary of the scammers out there. I would work on finding a community. Bearable Traders is great. Get in a Discord with people that you know and trust. Constantly be reaching out and following new people. Definitely read as many books as you can if that's your thing, or watch as many YouTube videos as you can. Just educate yourself.
That's a great answer. Jeremy, one of the things is people don't realize we literally just went through another kind of dot-com like bust. Like a lot of these, like DraftKings was like $70, now it's like $10. Peloton was like $140, it's like $10. A lot of things went bust like 90%, 80%. And the fact that people, like those of us, at least in Bearable Traders, the fact that we went through that and we're still able to maintain our account and continuously trading, that's a huge accomplishment.
Yeah.
Like generations get scared of the market like that and never come to the market and lose out on the opportunity. But the fact that we had this risk management, we had the proper process in place, really got to give ourselves kudos. It doesn't matter even if you lost a few months, but the fact that you were able to maintain an account going through a bust like this.
Yeah, that's very true. There are each bear market actually scared whole generations from the market.
Yeah.
Like dot-com bubble, there's one generation said, I'm not going to touch the market again. And then we had the financial crisis. But we are going through the second bear market, and a lot of companies have dropped. Don't look at the SPY that is down 25%.
Yeah.
Like about 6,000 companies are down, trading at 80% lower than their peak last year. So we've survived a huge bubble that is bears, but we were just frog in the pot that we didn't notice. But we are surviving a huge volatility, and that's a very, very important element for all new traders. What do you think, Jeremy?
Yeah, and to touch on what you're saying about volatility, for new traders, I would say teach yourself how to short. Whether it's shorting shares or shorting options, you have to learn how to short. And I think for myself, I was talking to Artie about this the other day. I really want to build out my my hedge techniques.
Yeah.
When it's one thing to short when the market goes down. That's great, and it's actually really easy. But when the market goes sideways, I think Ed calls that the kill zone, right? I think a lot of us that don't have experience, we get killed. And so, the biggest thing with that, or the first thing, would be practicing risk management. Hang on one second. We got
no problem.
Got a phone ringing here.
That's a beauty with the live show. We always have surprises.
So
like
where
this.
are you, by the way? Are you in the office?
I'm in East Hollywood, Los Angeles, kind of right by Los Feliz, Silver Lake, Echo Park area.
Yeah, it looks like a work environment, not your home office, no?
Yeah, so I own and manage a hair salon. It's called Shaggy's, and it's a little bit more of a we try to have a rock and roll kind of relaxed atmosphere. Why? I have my trading terminal set up upstairs, and when I'm not working on that side of it, I'm trading.
That's amazing.
Awesome.
That reminds me, Andrew, we should definitely do a West Coast meetup soon.
Oh yeah, LA, definitely LA. We'll come to LA, and definitely, we want to check out.
I was going to throw that out there. If you guys want a place to have a meetup in LA, you got a spot. You're welcome anytime.
There we go.
Can we actually bring traders, like about 40, 50 people come and just have a drink there?
We handle about 40 to 50 people. We do live events and stuff like that here. So. Yeah.
Oh, there you go. There it is. Then. Perfect. That's awesome.
Awesome. Jeremy, there was in the notes you sent me, there was this story that I want you to touch on. It is, you weren't part of BBT and you were following, I think Anna it was, and, you asked, hey, what is R? And then you said you got so many replies. Can you talk about that story? Because that showcased that element of community.
Absolutely. That was such a turning point for me. I had been following BBT and Anya and a few different people, and I'd seen her post about R a few times, and I had a feeling what it was, but I didn't know what it was. So finally I broke down and said, I'm just going to take a risk. I'm going to ask her, what is R? What is this R that you keep mentioning?
Yeah.
And she broke it down for me. It's your risk versus reward, and I'd had it drilled into my head that we should be using a 1 to 2 risk reward target. Don't enter a trade unless you can get 2 R's out of it. So in the beginning, it was the one part that I kind of ignored. Honestly, when November, December, January, February, I was playing pretty big, and I was probably having some days 4R, 5R losses, and I was okay with that because I was making it up. The trend was still up, and then came March, and I just got slammed, nosedived. I couldn't get a hit. I was having negative 4R days, and so that's when I really started implementing the 1 to 2 risk to reward. I dialed it back, so I have a 2R max drawdown, minus 1R max per trade, and if I get to 2, I'm out and I take a break, and that has helped me so much.
Yeah. That's amazing. In your result that you shared with me, one thing I noticed is it's not like 90% win rate or 80% win rate. If anything, it's a really nice blend of maybe 52 or even 50-50, but you're still up because you're viewing it in terms of R, and you're cutting your losses, like the real definition of, we always talk about letting your winners run and cutting your losses, but like when you look at it as R and you kind of have a set max drawdown for yourself, that's literally cutting your losses early and then letting your winners run.
And believe me,
Yeah, it
we
really
all
works.
have been there.
Yeah.
Yeah, we all have been there making those mistakes.
Yeah, it's pretty awesome. I was very skeptical at first. I think I mentioned I came up with my AKA on Twitter as Mr. 66.
Right.
And the idea is that you can actually lose 2/3 of your trades. You can only be 33% positive, but you can still be profitable if you're cutting those short. And I didn't believe that, and I've since I've been practicing the 1 to 2 approach. It's actually been true for me. And it works the other way too. I strive to hit, plus 66%. I think if you're making 66 to 70% as a trader, that's huge. You're doing really well. But I keep in mind, if I do dip down to 33%, I'm still in the range of profitability.
Yeah, amazing.
Yeah.
We talked about kind of your journey and how you started. We have about 160 people tuning in, which is pretty high. So that's amazing. We got lots of people interested.
Awesome.
I want to take it a little bit more kind of pro, so even if people that have been trading can get a lot out of this session as well. Kind of walk us through your process a little bit, your stock selection, and then in the notes that you sent me, you gave the basketball analogy and the surfing analogy. Kind of walk us through those analogies and how you're looking at and viewing trading so differently. And I think people will get a lot out of that as well.
Okay, yeah, for sure. I think in the last couple of months, I kind of changed my approach. I used to be constantly surfing around for different tickers. And for a while, I was following the pivot alert bot, which I love, and just trying to catch every alert, which one's going to be the good one. And just, found myself following 10 to 15 tickers at a time. And over the past couple of years, I've gotten really good at trading the indices. So for me, SPY and QQQ, once you figure out how they run, they're pretty consistent, they're very predictable. And so I kind of pulled back, again in March when things got sideways and hard to trade. I started focusing on SPY and QQQ. And then I also focus on the, what they call the FANGs, right? It's like Facebook, Amazon, I throw in AMD, Netflix, NVIDIA, Microsoft, Google. And I added Square because I'm like a Bitcoin guy. And Square was one of the first shares I made money on when I didn't know what I was doing at all. So I feel really comfortable with that. And you can actually use Square sometimes to predict what SPY is going to do, depending on if the Qs are up or not. So that's what I've been focusing on. I keep it really simple. I'm only looking at, 2 to 5 tickers per day, but really 2. In the morning, the first thing I do, I look at the pre-market data. I plot out, the previous day's high, previous day's low, previous day's close, and then I look at the pre-market high and the pre-market low, and then I also add in what we call the tinfoil line if that shows up, and those are my 5 or 6 key levels. Then I run Fibonacci. And I look for confluence between the levels. And a lot of times you'll get several levels. I'll change those in color on my chart. So I'll look for those, for breakout points or for targets. And then I also use the cams a lot. So I'll turn on the cam pivots. And it's fascinating because when you're using Fibonacci, sometimes you're looking for confluence with like a key daily level and you don't get it. And then I'll turn on the cams and I'll go, oh, it's a cam. The cam is lining up with Fibonacci or one of the other levels. And then I have confluence and I feel a lot more conviction on that trade. So that's kind of my approach.
That's awesome. It's interesting that you say, 3 or 4 names, and anybody that follows me on Twitter knows I'm a huge basketball fan, and it's the same thing about shot selection, Andrew. Like you don't want to put up a lot of shots, like tons of trades, back to back bad trades. It's efficiency really matters, and when we were on Monday when we were chatting, we talked about this as well. It's very similar to playing any professional sport or basketball. Your shot selection matters. You don't want to rack up bad shots, and then that's how basically you end up down on the day, right? It's like you said it in your book, Andrew, I believe. It's like being a sniper, waiting, and then when you see that opportunity. Do you also view it that way, Jeremy, or?
Yeah, how's your stock selection right now?
Yeah. I'm sorry?
How's your stock selection and how's your criteria for entering a trade?
Well, like I was saying, I look at where the stock is on the chart in relation to Fibonacci, and I'm really focusing mostly on SPY and QQQ, and again, and the FANGs. Especially if one of the FANGs pops up on the pivot alert spot, I'll check that out. If SPY goes a little bit sideways, then I might branch out and start looking at some of the other tickers. When things were really trending up, I was using the Trade Ideas scanner a lot, and sometimes I would get some big hits on that. I remember DWAC when the SPACs were going on.
Oh yeah.
I jumped in this DWAC, and I didn't even know what it was. It just looked right on the chart, and I could see it was about to pop. It had an impulse, it had a little retracement, and it was like, I'm about to go. I don't know what this is, but it looks good. So I jumped on that one because of the setup, not because I knew what the ticker was. And that thing ran, oh my gosh, I want to say it ran 600% plus.
Yeah, it was crazy.
And I was just, it was like took off. But yeah, sometimes I look at the Trade Ideas scanners. I definitely watch the call outs that you guys give in Discord, the BBT watch lists and stuff like that too.
Yeah, definitely. I mean, it's interesting that you're saying that. A little bit of maybe a shameless plug. Our developers are working on our own scanner, and then we're gonna add it to Trading Terminal. We're gonna add the pivot bot that you mentioned to the Trading Terminal as well. So we can't wait to have this tool grow as well, and we're working really hard on that. Jeremy, you mentioned about your March slump. You kind of hit a wall on March. And since we had Dr. Reed yesterday, and of course he's a psychologist, I kind of want to touch on that. How did you came out of that? Like, we know what you did in your trading. You switched over your tickers, but psychologically, what did you do to come out of that slump? Because I'm pretty sure there's tons of traders going through that right now.
It's funny that you mentioned Dr. Reed, because when I hit that point, I just couldn't figure out what was going on, and I was getting really psyched out about getting into trades. I was the fear of losing, and I've always kind of avoided looking at the psychology links on the website. I just thought, I don't think I need that, especially if I'm waiting. And then when I couldn't figure it. It didn't seem like it was my techniques. It didn't seem like it was my charting. There was a point where I think it's just me,
Yeah.
And I think Susan and Kreda and Megan were posting things like that on Twitter too. So I said, I'm going to dive in. I started going through the psychology links, and I landed on some webinars with Dr. Reed that it just breaks down everything that you go through with your emotions and how much that affects your trading. And it really changed things for me. And he had some suggestions about that I put into practice actually, to size down. Size down until you're really comfortable. Don't play with money that you're afraid to lose. And then you can kind of hone in. Is it your technique, or is it your psyche? Are you feeling a little bit nervous? You can start to figure that out. And then once you kind of get your technique settled and you feel good again, then you can start sizing back up. So that's what I did.
That's literally the advice he gave yesterday as well, how to trade a bear
Really?
market. Yeah. I don't know if you watched yesterday's show. He literally talked about that. Bring your size down because the market is just irrational and it's not you. It's the market. It's the nature of bear market and how it's happening. I'm so glad. So, if you're a trader out there, yeah, go ahead. Sorry.
I was just going to say, I have this, I guess I'm still a new.
Our guest last week, and he had a strangle Andrew on Amazon, and he closed it and he emailed me. I don't want to show the email. Maybe it's kind of personal, but he's basically saying 55K profit on that trade. So congratulations to him. And when I get emails like that, man, that really yeah.
$55,000.
Yeah,
That's on one option trade. That's amazing.
Yeah. So that's what we got to get you next on these directionless trades. I know you said you were interested. If you got questions, email me, Jeremy. I'll be more than happy.
I will do that.
Yeah.
I'm going to dive into that segment on the links and the webinars.
Yeah. Definitely. If you got questions for Jeremy, this is a good time right now to start typing because the system is about 15 seconds delayed. So now that we have Jeremy on, Andrew, anything on your side? Any question?
No, I think let's see if there is any question coming from the chat. That was a very, very interesting discussion. And what was their biggest, maybe I'll ask this question, what was your biggest loss and what was the lesson that you learned from it?
Ooh,
oh man,
we didn't discuss this.
I've had a couple big losses. I've had a lot of losses in unrealized profits when I was trading. I didn't know when to get out. In March, I took a $1,700 loss, and that was the one that I really went, okay, whoa, put the brakes on.
Yeah.
Like that's enough. I don't know how many it was. I don't know how many R that was that day.
Yeah.
10 R or something. And I've had some trades that really took off that I kind of was afraid to close, and I didn't have my stop set. Again, this is when I was newer, and so I'm always setting stops. 1R, 2R at least.
Do you move your stop, Jeremy? So if the stop,
absolutely,
yeah, that's amazing. Yeah,
yeah,
that's what I wanted to say. This is one of the things that gets a lot of the newer traders. They don't move their stop. If the move is like the stock is going your way, move your stop with it and keep taking profit, and that's what you got to do. That's amazing. We got a lot of questions coming in, so let's actually dive in. You mentioned playing 2 to 1. Julian is asking, does that mean that you're playing all or nothing, 2R or negative 1R without scaling out? So I think that's a good question.
Generally, I'll run 4 to 5 contracts at a time. So I don't always buy all of them at once. I usually scale in. I might start with 2 contracts, then I might add 1 or 2 more, and then I might add 1 if it's really going. And then I'll start to scale out. With options, I'm using 20% hard stop. So 20% is my R, and I'll generally scale out 1 to 2 contracts as soon as I hit 20%, and I'll move my stop up to break even at that point. Sometimes I'll move it up to 10% or even 20% if it's really taken off. But especially with options contracts, you want to throw a stop on there as soon as it's in profits, even if it's just break even.
Yeah. Do you do at the money when you're betting on direction, or do you do it slightly in the money?
I like to do a little in the money. I
Good
like
job.
to give myself as much time as possible. If I can get them 2 or 3 weeks out,
Good job.
I prefer that.
Yeah.
But
that's
I also play 0 days till expiration on Fridays, but again, I size smaller when I do those plays.
Yeah, those are one of my favorite too, those 0 days. And the fact that you say you do slightly in the money, that's one of the things I preach in the chat room as well. I said, because of how the decay works, if you want to bet direction and you want to scalp and you want to do momentum, make sure you're slightly in the money. Like I usually say 60 to 70, 75 deltas. And that's amazing that you're doing that. Very, very impressive.
Yeah, I noticed there's kind of a sweet spot. I mean, if you go too far in the money, then it doesn't always work out. And if you're out of the money, obviously you can lose from decay. But if you get there's like a $1 to $3, $1 to $2 in the money, that seems to be a good spot.
Yeah, exactly. I'm monitoring the the chat here to see if any questions came out. How do you think a stop when jumping on a trade scalping? How do you set it up? So I think this is kind of a mechanical thing. Do you do like kind of a limit orders or for your stops?
He's asking, or they're asking, how do I set up an options play? Just
I think he's
sure I
mostly
understand.
asking. John is asking mostly about your stops. So are you asking, like, are you using stop orders or is it like a mental stop?
Okay, and is this is for getting in or for getting out?
Getting out, I believe.
Okay, so I use hotkeys, and I like to use the soft hotkeys with the mouse.
Right.
And I'm running on a few different platforms. And generally, I like to do a hard stop at 20% because it keeps me honest.
Yeah. Nice.
But then I like to stop out manually. Once it goes in the money, generally I'll stop out manually.
Yeah, that's amazing. I mean, questions keep coming. I don't know how long we want to go, but
I mean, we don't have a lot of
Yeah.
really time. So do you still trade equities or only options now?
Right now I'm focused on options, but I'm going to get back into equities. Yeah, very excited
Perfect.
about that.
So I just want for the 150 people that are watching now, if you haven't liked our channel, give us a like, a thumbs up. Jeremy get excited. Thanks for your time. One question that comes is that do you have trading time set or monitoring all day or whenever there is no one in the store?
That's a good question.
You know, I mostly trade from home. Sometimes if I have to get out, Mondays I work out and then I come running back and I set up at the shop. Generally, I get up and I go straight to my trading terminal at the house.
Yeah.
Nice.
I mean, that's a benefit of living in the West Coast, right? I mean, you can trade, and then by the time you actually have to go and open the shop, the market, all the action is already done in the market. So that's kind of
Exactly.
yeah. You
Yeah,
lose
get
out on
done
a
by
sleep. Yeah, but
11 or 12, and then work all day. Yeah.
Yeah, that's amazing. Wow, Jeremy, I really appreciate you reaching out to me on Twitter and kind of being brave enough to come here. I know it's not easy. Of course, a lot of people may be not comfortable sharing this story, but really appreciate it. You have no idea how much it helps other people. Just like that. I think for me, that psychological aspect that you talked about on March and limiting your slide, that was the nugget that I took away. So there's a learning opportunity for everyone. Thanks again. Thanks for coming.
Absolutely. Yeah.
Yeah.
Thanks for having me on.
Yeah, you betcha. Andrew, any last remarks from you before we lose Jeremy?
No, thank you so much. Thanks for all of the likes. Bring it to over 100 people, those of you who are listening to. And Jeremy, again, thanks for your time. It's just, I know you don't get paid for it, and it's just all out of your generosity. Thank you so much. And I hope I see you soon in LA. Yeah. We haven't met yet,
Yeah. Yeah, you guys got to let me know. We got to catch a Lakers game or something.
Awesome. Oh
yeah,
yes. So hopefully next season they're not as bad.
Yeah.
But I can't wait to watch a game with you. Yeah. I appreciate it, Jeremy. Thank you so much. We'll be in touch. And thank you. For everyone, if you want to follow Jeremy, by the way, on Twitter, he shares his ideas. Mester66, and he talked about why his username and handle is Mester66, by the way. Make sure to follow him. I'll put your username in there as well so you get some followers and bounce off ideas with people. I love Twitter. FinTwit is my favorite place.
Yeah. Appreciate you guys.
Yeah. Cheers, man. Have a good one.
Cheers.
Thank you so much. Bye. Goodbye, everyone. Thanks for your time. Alrighty. Thank you, everybody.